What's up guys, it's Accountivision. In this video you will learn what a T account is and how you can prepare it just by using a secret technique. Using this technique will help you answer T account questions in ease, and I will show you how to use it with examples step by step. So make sure you watch until the end of this video to benefit from this. So let's first understand what a T account is. A T account is an account that looks like a letter T. It has a name of an account, such as bank, sales, and many others. The name of the accounts will depend on the business transactions. Those transactions will be recorded in T accounts after doing double entry. Also, a debit is recorded on the left side of a T account and a credit is recorded on the right side. That's just how it is. In addition, the amount that has been debited in a T account must be credited in the other T account, and vice versa. I will show you what I mean in a few minutes, so stick around until the end of this video. Now let's find out what the secret to prepare a T account is. I will use only 4 steps to prepare T accounts very easily. The first step is to identify the amount. The second step is to identify the accounts. The third step is to use the dead click acronym. The letter E is for expenses, A is for assets, D is for drawings, those are debited, while L is for liabilities, I is for income, and C is for capital, and those are credited. And the final step is to prepare the T accounts. Let me show you how this works. Here is an example of transactions that is used to prepare T accounts. All you need are the 4 steps which I just told you. Trust me. So let's get started. Transaction 1 says they invest £10,000 in the business. Using the 4 steps, step 1 is to identify the amount, it's £10,000. Step 2 is to identify the accounts, it is bank and capital. The word invest relates to capital as someone invested money into the business, which makes them part of the owner, and because the money has gone into the business bank account, it relates to bank. Step 3, I will use the dead click acronym, which is this one here. Bank is an asset as it is the amount they own, so it is recorded as a debit, which leaves us with a credit for capital. And step 4 is to prepare the T accounts. I am going to debit £10,000 in the bank account and credit £10,000 in a capital account. So you see, using those 4 steps, we are able to pick out relevant information that will be used for preparing the T accounts. Let's look at transaction 2. Transaction 2 says they made a sale of £5,000 on credit. Using the 4 steps, for step 1 it is £5,000, for step 2 it is trade receivables and sales, as the word sold relates to sales and the word credit relates to trade receivables, as they have been given some time to pay that amount. So they must pay £5,000 after the credit days. For step 3, trade receivables is an asset as they owe the business £5,000, so it is recorded as a debit, and sales is an income which is recorded as a credit. Finally, step 4 is to prepare the T account. I am going to debit £5,000 in the trade receivables account and credit £5,000 in the sales account. For transaction 3, I am going to give you a chance to try and prepare T accounts for these transactions like I've done for the previous 2. So if I were you, I would pause this video, give it a try, and when you're ready, play this video and I will show you what to do step by step. Okay, transaction 3 says they received £2,000 from trade receivables using the 4 steps. For step 1, it's £2,000. For step 2, it's bank and trade receivables. Here they mention trade receivables, so that's basically a clue. And since they received £2,000, it relates to bank. For step 3, bank will be debited as it is an asset as they are receiving funds, which leaves us to credit trade receivables as they are paying to reduce the amount owed to the business. And step 4 is to prepare the T account. So we debit £2,000 in the bank account and credit £2,000 in the trade receivables account. Again, for transaction 4, if you want to have a go at this, pause this video, give it a go, and play this video when you're ready. Transaction 4 says they bought goods on credit using the 4 steps. For step 1, it is £4,000. For step 2, it is purchases and trade payables. We must have purchases account when the business buys goods on credit and must also have trade payables account as the business are buying goods from their supplier. For step 3, we must credit trade payables as it is a liability and debit purchases account as it is a direct expense, as those goods are one of the reasons why the business makes sales. Now we can prepare T accounts. We will debit £4,000 in the purchases account and credit £4,000 in the trade payables account. Next, we have transaction 5. Transaction 5 says they paid £500 for electricity using the 4 steps. For step 1, it is £500. For step 2, it is electricity and bank, as the word paid relates to the money and electricity is what is being paid towards. For step 3, we must debit electricity as it is an expense, which leaves us to credit bank as the money is being used. Now we can prepare T accounts. We will debit £500 in the electricity account and credit £500 in the bank account. Moving on to transaction 6. Transaction 6 says they have taken £6,000 for personal use using the 4 steps. For step 1, it is £6,000. For step 2, it is drawings and bank, as the word personal use relates to drawings, and since the money has been taken out of a business, it relates to bank. For step 3, we will debit drawings, which will leave us to credit bank. Now we can prepare T accounts. We will debit £6,000 in the drawings account and credit £6,000 in the bank account. Finally, transaction 7. Transaction 7 says they borrowed £15,000 of loan from a bank using the 4 steps. For step 1, it is £15,000. Step 2 will be bank and loan as they have borrowed money which will be going into a business bank account. For step 3, we will debit bank account as they are receiving funds, and we will credit loan account as it is a liability which must be owed. Now we can prepare T accounts. We will use the £15,000 to debit in the bank account and credit in the loan account. Once we have done all that, it should look like this. Before I do the closing entries, it is important to understand that what relates to the balance sheet must have brought down and carried down, and what relates to an income statement must have the word IS, which means income statement for short. Let me show you what I mean. Let's look at the trade receivables account. We must first look for which side has the highest number in total. In this case, it is £5,000 on the left side. In order to balance that T account, we must put the £5,000 as total for both sides. The right side has £2,000, which does not total £5,000. So we look for the difference, which is £3,000. That £3,000 is the closing balance, which will be brought forward to the next financial period as the beginning balance. Let me put this in context. Let's say we have two customers. One owe us £2,000 and the other owe us £3,000. Here you can see that one customer has paid £2,000 but the other hasn't. Therefore, that £3,000 has not been paid in the current period, and we will be carrying this amount forward to the next financial period as that customer still owes us that money. For the income statement, let's look at the sales account. The highest number in total is £5,000, so we put £5,000 as total for both sides. For the left side, to total £5,000, we must put £5,000 for that T account to balance, and that £5,000 will go to the income statement as it relates to a current period. And just to finish this video off, I've balanced the other T accounts just to save you guys some time. Just remember when closing the T accounts, if the accounts are assets, liabilities or capital, you must include the carry down and brought down balances, and the accounts that are either sales or costs, you must write IS for income statement. Hopefully now you can prepare T accounts easily by only just using 4 steps. If you found this video useful, give it a like, subscribe to this channel as I'll be doing more videos like this in the future, and share it to someone you think will benefit from this. And thank you for watching this video.